All right, good morning, trade pros. Welcome to Morning Market Update for Wednesday, February the 20th of 2019. It is Wednesday, right? All day? Yeah, it's Wednesday, Mark. We got a great day ahead of us. Welcome to our Morning Market Update. We're going to talk about a few things. Wednesday is typically oil inventory day, but Monday was a holiday, President's Day, and therefore oil inventories are shifting to Thursday. So we're going to have to wait for the oil inventory until tomorrow. Just a heads up, want to start the broadcast there. And let's start out with our morning market fun fact for the day. This is actually kind of cool. On this day in 1852, so we're traveling back hundreds of years here, a locomotive of the Michigan Southern Railroad arrived in Chicago, connecting the breadbasket of the world directly with the eastern U.S. for the very first time. And instead of more than 2 weeks by horse, coach, canal, and boat, the goods were now shipped and connected through railway from New York City to Chicago. Goods, money, and people could flow between the two cities faster than anyone imagined. Commerce boomed. So it's pretty interesting to see. 1852 seems like a long time ago, but it's not. I remember 1852. I don't. I wasn't alive back then. And that's then since then we've had the airline industry innovate, and really things are becoming interconnected. Now we have the internet that's connected things, and people these days are connected more so than ever before, and so are markets. And so what I want to tell you with this is we've come a long way, and markets these days are also free-flowing information between countries easily. You can always get access to any market. So I encourage you all to look at multiple markets and use correlations. All right, little fun fact. I mean, is that going to change your life? Maybe change somebody's life. Hope it did. Some key earnings from yesterday. We had Walmart come out at 2%, 2.2%, topping sales and raising their dividend. So really strong report out of Walmart. Very interesting company. Yesterday, one of our members posted a graph showing that income for Amazon's now actually passed Walmart as Walmart was decreasing. So really interesting chart that he shared. Thank you, Eric, for that, by the way. I found that really interesting. All right, the retailer came out with pretty strong earnings. It beat, even though it was a slower holiday shopping season, Walmart did strong retail numbers, and their stock is up after hours more than 2%. All right, they had a 4.2% increase in the last quarter of overall sales. Strong grocery sales, online orders, and holiday purchases, which included toys, also provided a boost to the company. These reports, by the way, exclude sales like gasoline. So gasoline at their Walmart stations are excluded from this figure. Nonetheless, very strong, beat all Wall Street expectations, and we're starting out with a little bit of a positive atmosphere because of that. Retail is a very strong industry in the United States. 80% of the GDP, the gross domestic product in the United States, is attributed to consumption, consumer spending and purchasing things. And retail is a big piece of that still. Even though the retail industry has kind of been on a slow decline, slow, steady, and consistent decline due to online sales, a lot of retailers are actually getting online and selling their goods there. So we're still doing commerce. It's just online nowadays more so than ever. Strong earnings out of Walmart. That's putting a little bit of an upside here on the stock market because we didn't expect it after a slower holiday season. Another thing, yesterday, Donald Trump said that he's seeing more hopes for a deal being done. And he said that, the March deadline is it's a random deadline that he put. But the question traders are now wondering is, hey, so we're not going to honor this end of February deadline because it's a week away, almost a little bit more than a week. So what does this mean for the tariffs? So we haven't really got a report on that. We haven't got any kind of indication. Is the U.S. going to put tariffs on China at the planned pace of 25% on $200 billion worth of goods from the current 10%? And if so, does China know that? And I think that everyone's sort of anticipating what's going to happen. Nobody knows at this point, but that still remains a headwind. If Donald Trump says, as we're waiting to work out a deal and we're extending it 60 days further out, and we're going to hold off on the tariff increase until then it's going to be a positive thing for the market. And I think that's already priced in. All right. In Asia today, Japan's up 0.6%, Hong Kong's up 1%, China's up 0.2%, India up 1.1%. In Europe, at midday, London, Paris, and Frankfurt up 0.2% all across the board. So modest gains, but green nonetheless. Futures in the United States are slightly lower this morning. S&P, NASDAQ, and the Dow down 0.1 percentage point. And, it's not a massive sell-off. Considering we had a nice rally yesterday and then we sold off into the closing bell, today's going to be an interesting day, all right? I'm still seeing bullish sentiment. and dips today are to be bought until about 2 p.m. in the afternoon. Then we have a huge report. We'll talk about that in a moment. Crude oil is down this morning slightly, 0.6%. Gold's flat for the day, but it's trading into the 1340s. All right, gold's been a really strong uptrend, and this is something that's really been kind of causing some confusion in the industry, because if gold's going up, typically equities will correlate negative. Gold increases in value as there's perceived fear and risk out in the marketplace. And so a lot of people are looking at this, including myself, and saying, hey, gold's tracking higher. Where is this money coming from to purchase more gold? Obviously, one answer is China, because China had a week-long lunar celebration, their holiday for their Chinese New Year, and gold dropped, and then now they're back, gold's back up. So that's one of the facets of it, but there has to be more money flowing in. And if you're not selling equities to buy gold, then you're using cash. And how much cash do you have, and how much do you want to allocate to buying gold? This is a really interesting trend to follow with. Gold continues to put in new highs as equities are also rallying. It's not a phenomenon. These things do happen, but they are inversely correlated assets, loosely about 60% correlation. So at some point, equities are going to have to either start to give some of these gains up, or gold's going to have to come down temporarily. And at this point, though, we're in a strong bull market in both. All right, very interesting observation. 10 a.m. we're going to have e-commerce retail sales. 11:30, a 13 billion 2-year note auction. 2 p.m. is the really big news event here for today, and I'll tell you why. The FOMC minutes are coming out. So the FOMC meeting minutes, for anyone who's not familiar with it, is an account of the conversation that was had at the last Federal Reserve meeting in January. All right. What makes January's FOMC meeting minutes so important, more important than any other meeting minutes cycle in the last year and a half, is this. What's happened here is Jerome Powell did a 180. He was a dove, meaning that he is rather a hawk, meaning he wants higher interest rates, and they were raising rates every single quarterly meeting. They're on an upward cycle. And he was also unwinding the balance sheet, which is basically reducing liquidity from the market. So these type of actions are saying, look, we're moving away from supporting the market. We want to get out of this position. We're raising rates. The economy is doing good, and we don't want the economy to overheat. So we're going to increase the borrowing costs, to slow it down a little bit. And then suddenly, after the sell-off and a few phone calls from Donald Trump, I imagine, all right, and Steve Mnuchin on Christmas Eve saying, hey, you know what, I'm going to call some of the banks to reassure them. And Donald Trump tweeting, let's buy stocks. This is the best time ever in the world to be long. That marked the low of that sell-off that we saw. We got into a bear market technically, and now we're recovering from it. And so interesting stuff, because if Jerome Powell did a 180 and completely shifted from higher interest rates and an unwinding balance sheet to we're not raising rates anymore, we're close to neutral, to some market participants even now expecting the next move to be actually be a cut and not a rate increase. And then to saying, hey, we could even stop unwinding the balance sheet. The balance sheet is not something that's permanent. We've set a schedule, but we could always stop that schedule. We're going to use all our tools before we cut rates, which means what's all the tools? The balance sheets are going to provide more liquidity into the market, which is supportive. The market like that. The market's been rallying since. The reason these FOMC meeting minutes are so important now is that we get to see the discussion behind the scenes. Now we're looking for clues and cues as to what this could mean for the next step. Here's how it's interpreted. All right, Jerome Powell is the speaking leader. He's the Fed chair. But what did other members say? All right, how are the meeting minutes going to be revised? What was the discussion like? All right, how was the balance sheet normalization conversation? Did they say we are going to stop the balance sheet offload? Or are they saying we might be able to stop later on? And if the answer is later on, then what are they looking for before they stop unwinding the balance sheet? There's a lot of unanswered questions. The market was taken aback from Jerome Powell's flip from one side to the other, literally within weeks, not even weeks, within days. And now we need answers and explanations. It was a bullish event for the stocks. And at the same time, the market liked it. It rallied. And at the same time, we need to see an explanation of some sort. So that's what people are going to be watching for today. Those minutes come out at 2 p.m. Eastern. It's going to create a lot of market volatility. Be prepared for it. Don't get caught by surprise. Be at all your positions by 1:30, 1:45. And then look to trade the event as if though it's a news event, because it is. All right. And the way we trade news events, we're not trying to guess where it's going to go. We're waiting for the data to come out. We're letting the impulse move happen, and we're waiting for a pullback to get an opportunity out of it. So that's this afternoon. Huge report, 2 p.m. FOMC meeting minutes. All right, that's what we got for the day. That's the volatility event of the day. This morning, we're going to be moving on technicals. I'm going to turn around in a moment and show you some levels for you guys on YouTube. We typically end the broadcast here and go into the trading room. But this morning, I'll share some levels with you on the S&P. And if you like that, I'd love to see some thumbs up on YouTube. If you click the like button, it'll tell me you like seeing that, and we'll do it more. All right. What else? That's what I got for you. Let's turn around and look at some levels on the S&P 500. Ooh, my Spotify's on. Genres and moods. What genre and mood am I in? I'm in a little bit of an energetic mood. I'm just kidding. Let's get to the stocks. All right. Let me pull up the pen tool, and it is pulled up. YouTube, I'm going to bring you in on the screen, on the fun, on all the action. All right. So let me go in here and screen share with you. All right. And you guys are going to see a screen in a moment. There you go. Okay, so what are we looking at this morning? First of all, yesterday's price action, we saw quite a bit of a rally. Yesterday's open was 66.5, and we rallied all the way up. And the previous day, or yesterday's high, was set at 87.5. All right, so we had about a 22-point run yesterday. They literally gave us little opportunity to get in. I mean, we did have a few rotations, and then we sold off towards the closing bell. And we haven't been able to really make any kind of traction after that. Yesterday's closing price was 77.75, which is roughly about the halfway point of the gains we had for the day. We erased half the gains in the sell-off into the closing bell. The last 10, 15 minutes or so was really intense on the selling. All right. So now the question becomes, where is support? Well, right now, this is support. Where did we land on the S&P 500? The point of control off this volume profile, it's sustained the price action. Overnight low dip behind or below it temporarily at 73.25, but we're coming back into the upside. So in order to see some bullishness here for the day being established, we really want to see price action take out the 82.25, and then we're going to start to qualify dips into this to look for a long opportunity. Our long will ultimately take us up to these 86 halves. The ultimate target here is 88 initially, but you don't want to be getting paid at the target. You want to be getting paid below the target level. One thing I could teach you in this morning market update on the house is the fact that if you have a level, drop your take profit 2 or 3 ticks below it, because by the time it hits your level, you want to be out. How many times have we seen price go up to a level, miss it by a tick, and then puke downward? And it's totally unacceptable to have a large profit and watch it evaporate and turn into a loss even when you're 1 tick away from your profit target. All right. You have to understand that as a trader. A lot of people teach you in the business, wait for your targets. It messes up your risk management. You know what else messes up your risk management? Taking a 99% to profit target trade and seeing a loss happen. That will really mess up your risk management very quickly. So that's the S&P 500 looking to get long on some rotations lower. The pivot here, 77 quarter, so above the pivot. We're looking for bullish opportunity up to 88s. Second target level will be 98 on today's session. All right, let's let the first few minutes settle in, and then we'll look to qualify some opportunities on the opening bell. Thank you guys for joining in. I'm going to send it over to you to Stephen right now, talk about oil, and then I'm going to drop it back to market to cover the Dow in the same type of fashion, and we're going to look for some opportunities. All right, YouTube, it's been a real pleasure. I'll see you guys tomorrow morning. If you want to trade with us in the room, our pro and elite subscriptions come with the opportunity to join all of our community traders and trade with us live every single morning, Monday to Friday, 9 to 11 a.m. Eastern. And we show you trades, analysis, and all the good stuff. We'll see you there. Take care and goodbye.